I dare I say that what has started here in Australia is now spreading right across the world.
Wednesday, April 7th, 2021, Monaco 64, home of alternative economics and contrarian views. Today, I have John Adams back on the channel. I spoke with John Adams from Adams Economics in Australia back on March 24th about the supply situation in the silver market. And back then, silver, the paper price or the spot price was around 25. Today's still around 25. So it looks like the bullion banks, the central banks are managing to keep that price from moving higher. But nothing has changed in the silver market, right, John? Especially in Australia.
Well, what I would say, Mario, and I was going to say thank you for having me on the program. Nothing's happened on the price, but there is a lot happening in the physical market, and so we can talk about Comex and what we think is going to happen with Comex, what's happened in the last 2 weeks, and what we think is going to happen in the next 8 weeks as we go into the May contract. But in the physical market here in Australia, since the last discussion, we have had the biggest stampede in the country's history out of these synthetic products and into physical. So our last discussion, and I did a range of other discussions with other YouTube channels. A lot of Australians have woken up to this situation with unallocated, pull allocated products, which are basically nothing more than silver certificates, promissory notes. ETFs are basically nothing more than you own a unit in a trust. And obviously, everyone's now awake to the legal differences of what they are. But on top of that, the situation of the Perth Mint has gotten worse in a lot of regards. There's been a disastrous public relations campaign by the Perth Mint CEO, Richard Hayes. So let me give you some examples. He's done a number of interviews with the mainstream media, all propaganda pieces, no hard questions, nothing that actually inspires confidence among Perth Mint clients. And every time he opens his mouth, he's just driving more people to leave the Perth Mint or to take physical and to take it out of the Perth Mint. One of the biggest miscalculations that the Perth Mint has made is because this market is so corrupted and suppressed, the mainstream media in Australia do not discuss on a regular basis gold and silver. So gold and silver investors typically go to the alternative media to get their information about the market. So they come to your channel, they'll come to my channel in the interest of the people. The bullion dealership I work with is Good as Gold Australia. They'll come to that channel. They'll go to a whole host of channels in the United States and Canada to get the latest thinking by some of the best experts in the industry. So now Richard Hayes cannot go on your channel or my channel or other channels because we would ask him the right sort of questions and we would put his feet to the fire about particularly this fractional reserve synthetic program he's running and why is he leasing gold and silver in up to $1.7 billion, particularly when, for example, the Reserve Bank of Australia told Parliament the gold does not move. So there's a number of questions that you could put to him, that I could put to him, that would make him extremely uncomfortable, and he can't do that. And so the only thing he can do is to put out these appearances on the mainstream press, and these appearances have led his customers to be more anxious and more agitated. And now that we've been openly talking about this, I have to say in the last 3 weeks, I've had 4 million impressions plus on Twitter. So every time I get a new piece of information about Perth Mint or Kitco or some of these other things that I'm seeing, I put it on Twitter, and we've had a lot of people repost my tweets, and a lot of people sort of come to my social media channels, and we're getting the word out there. But one of the things I said in an interview this morning with someone else is what we're seeing in the last 2.5 weeks, Mario, is a revolution in the silver market. And the reason why I say it's a revolution and it's a global revolution is because when a retail client goes from synthetic to physical, they're never going back to synthetic. So once they wake up to the situation and they actually move their money and move their resources from an unallocated, pool allocated, or ETF position to a physical gold coin or bar, or a silver coin or bar. They're not going to go back to this synthetic product. So what we are witnessing, particularly in the Australian market, is a permanent structural change in the market that's going to have huge ramifications for London and for Comex. And so I'm getting stories, and I'm getting so I've said to people, if you've converted from synthetic to physical, send me an email, send me a message. I want to document your story. So I have a running tally. So I can say, hand on heart, I've at least moved 20 tons of product from synthetic to physical across multiple continents. And I'm getting emails out of the UK, out of Germany, out of Argentina, out of America, Canada, and Australia in particular, where and also I should say New Zealand, where customers are now moving their money from these products. So the more interviews I do, the more discussions that people have about the Perth Mint, about the differences between a synthetic product and a physical product, the more people are waking up to the story, and it's really having a very big impact. And so obviously we're recording on Wednesday just after Easter. I can tell you in the 2 weeks leading up to Good Friday, there was, particularly last week, there was an absolute stampede in the Australian market, both in terms of Perth Mint customers, but also there are other dealerships in Australia that offer unallocated, pool allocated products. And I have some contacts in the industry, and I got told last week, just before Good Friday, that the volume of Australian clients coming in and converting their synthetic position to physical, it is unprecedented in the market. So we are seeing things move, and even though it's Wednesday after Easter, dare I say yesterday and today, we are still seeing this revolution on the way. And definitely Kitco is now in my sights. There are big questions about Kitco's accounts, and we've had people coming forward about their position with Kitco, and I've been putting out a number of tweets. Phone calls are being made to Kitco, and people are saying, well, what's the real position with the Kitco situation? And again, now, one of the things I should say, just in terms of context, one of the people who called this first was actually Craig Hemke from TF Metals Report, and I just did a discussion with him this morning. So on the 2nd of February, he wrote an article for Sprott Money, and he said that the crisis in the silver market with the silver squeeze will not be seen in New York with Comex or with London. It's going to be either seen in Perth, Montreal, or Zurich with these unallocated accounts. And lo and behold, within 8 weeks, where has the crisis first come? It's Perth, and we are seeing huge issues with Perth. And just in the last 24 hours, we've had this new scandal about people standing for delivery and getting delivery, but then they're realizing, what are they getting delivered? Not Perth Mint product. They're getting LBMA accredited bars from a Chinese refinery. And a lot of retail customers are up in arms with this situation, because that's not when they do business with the Perth Mint, they're doing it because of the reputation of the Perth Mint, the quality and the standard of their product, which is internationally recognized. And the Perth Mint is not the cheapest option in the Australian market. So people are willing to pay extra money because of the reputation and the quality of the Perth Mint and the Perth Mint brand. And all of a sudden, I get a message yesterday morning from a customer who stood for delivery of 17,000 ounces from unallocated to allocated. He was told, we've got 2 1,000-ounce bars of Perth Mint product, but the rest, they are LBMA accredited bars from China. If you wish to have them, you can have them by paying the fabrication cost. So he decided to take that on, and I tweeted about that, and that's significant for 2 reasons. One is this information about Chinese bars backing the Perth Mint synthetic program has never been told to the market, but also it signals that the Perth Mint is running out of its own product. And that, I think, is significant, given that Richard Hayes has consistently said they are swimming in 60 tons of silver ready for sale. Well, if you swim with so much silver, why didn't you tell the market that the silver that you have isn't your actual own product, but it's from China? Now, there are concerns about the integrity of these bars out of China. Now, I have no specific evidence about these products, but all I know is that last year the LBMA approved a number of a number of Chinese, Russian, and Turkish refiners because they were running short on physical supply for Comex and for London. So they needed to increase the supply of approved silver. So they went off and ticked off a number of refiners. And so some of these Chinese refiners that got the accreditation last year, these are some of the bars that now the Perth Mint is passing on to clients in Australia. And clearly there are some Australians who are nervous about the integrity of these bars and the lack of communication. And that's the scandal this week, that some people stood for delivery, got delivery in the last fortnight. They never asked what product they're going to get. They were never told. They just assumed that they were getting Perth Mint product. And I just had one person yesterday afternoon who saw my tweet yesterday morning when I communicated to the market about these Chinese products. He called up the Perth Mint and said, well, I've paid fabrication costs for 6 1,000-ounce bars. What's the brand of the bar? And he was told these are Chinese bars. And that's when he was up in arms and threatening legal action and said, well, I'm not paying for Chinese product. I want Perth Mint product. That's why I'm doing business with you. And basically he said, if you send me these bars, because he wanted to freight it across the country, he said, I will literally drive to Perth and give them back to you. I don't want them. I want your product. And so they've had to give, so it's the way they settled that was they said to him, we'll take someone else's Perth Mint bars, give them to you, and we'll give this other person Chinese product. Being provocative like I am, I put that out on social media, and dare I say, there's a range of phone calls happening today here in Australia about when people have paid these fabrication costs, what did they get? Because again, the biggest problem with Perth Mint is they have not been honest. They have not been transparent. Richard Hayes has been disparaging of his customers, and he talks like a banker. He doesn't talk like a bullion dealer or a mint or someone involved in the gold and silver mining industry. He continues to drive his customers away, and I continue to report about it in real time. But the word's getting out around the world, and it's a very exciting phenomena because we are literally changing the market in real time.
And I remember back in the beginning of February as well, when there was all the talk about the silver squeeze, Wall Street bets. I thought it was going to take a lot more time for this to evolve, but I think it was really important. It awoke people about silver, that there are different products, because most retail investors, not most, but a lot of them thought, well, it's easier just to keep it at the Perth Mint. It's guaranteed by the government. And the same thing happens here in the UK. I think the Royal Mint provides depository facilities. I haven't checked with them whether they deliver, or what people haven't come back to me telling me, oh, I try to get delivery. But I remember specifically calling Bullion Vault here in London. The Bullion Vault is a really big depository company, and they were actually funded years ago by the Rothschilds. Lord Rothschild actually put millions of pounds into this company. And I call them because I have a lot of viewers, and there are some other YouTube channels who promote them. I don't promote them. And they were asking me, is my silver safe at Bullion Vault? And I called Bullion Vault, and I have an account with them that I opened over about 15 years ago, but I keep nothing there because once I learned the Rothschilds were involved, I stopped having anything there. And I spoke to a couple of people there in the beginning of February, and I said, if I wanted to take delivery of my silver, what would that entail? And they said, oh, we never really do that. We try to discourage clients or customers from taking delivery. you would have to pay the VAT, which is something that we have to pay here in the UK. You can avoid VAT by buying unallocated silver here in the UK, but if you try to convert it to allocated, they will charge you the VAT. But even allocated, they said, the guy said, well, we never try to do it. And even with gold. So yes, these places like Bullion Vault, the Perth Mint, I'm not saying they don't have the gold or silver, but I wouldn't be comfortable in having all my exposure, because we can't say that you have gold and silver once you, in these institutions. But I would be like phoning them and trying to get it out of there. And it's interesting that you mentioned Kitco, because Kitco seems like a company that is in the alternative. I've followed their websites since the beginning, when I started buying gold and silver in 2002, because it has a wealth of information about precious metals. It has articles from the alternative, like us, but at the same time, I've noticed they've been providing this synthetic product in Kitco for many, many years. But I saw, I think you tweeted recently about someone who said that it was going to take a year to get delivery from Kitco, which seems outrageous to have to wait for a year.
Yes. So someone sent me a message this morning and said that they had, I think, 2,700 ounces unallocated at Kitco. They stood for delivery. They had to take in 10-ounce bars or something like that, but there was enough for them to deliver. But then they were told that if you wanted to convert anything more than what he already converted, the wait time could be up to 12 months. And so people are jumping up and down over a few weeks, a few months here in Australia, but a year at Kitco is just like completely ridiculous. But I just have to sort of ask you, Mario, with Bullion Vault. So surely when you talk to a company and you say, I want to stand for delivery, and they're trying to discourage you from standing for delivery, surely there has to be a red flag.
Yeah, they're reasoning, the guy told me the reason they don't encourage the delivery is because their service is supposed to be a vaulting service. So they're trying to keep their clients, make their clients keep their gold and silver with them. But to me, it raises red flags. I think Ronan Manley, when he did the analysis of all the silver ETFs, he had Bullion Vault and I think gold money as part of all the people who have a lot of silver. So it's a big company, and they've only been able to stay big, I think, because they're not a typical bullion dealer. They don't really provide the service where you call the dealer and they'll send you the gold or the silver, the physical. And I just don't trust the fact that people like the Rothschilds were involved in the formation of the company, because we know the Rothschilds and the central bankers, they don't want us to get outside their system. And I think holding unallocated or even allocated with these people is a way to keep the big boys going, the Comex. And like you said, I think the problems are starting at the periphery, places like Perth and maybe Montreal, like you said, and others. But it will come to London and New York as well. I don't know if you remember a few years ago, maybe 3-4 years ago, Morgan Stanley had to pay millions of dollars. They settled out of court because clients thought that they had silver with Morgan Stanley, and they're actually paying storage fees for years. And then they tried to take delivery, and Morgan Stanley didn't have the silver. So Morgan Stanley is a big bank. And as you said, Richard Hayes sounds like a banker. So you have to even wonder, and I'm not saying this is a fact, but you have to wonder whether they are even keeping anything for you there, and you're still like paying them storage, which would be fraudulent. Paying for something for a service that they're not providing. I saw as well some photos. It was a documentary, I think something came out in Australian television about the Perth Mint, that the allocated bars, they keep track of them with Post-it notes. Is that true? Do you want to go over that?
Yes. So over the Easter weekend, Richard Hayes did what I would call a propaganda piece with Sky News, what they call Business Weekend, and it went for 6 minutes and 44 seconds. And this was just talking about the Perth Mint, its business. It's just like a promotional video. And there was just a couple of questions at the end about the gold market, about Reddit, about Wall Street Silver. But again, no tough questions, nothing of investigative nature. And even Martin North, who's not a silver bug, he emailed me and said that that looks like just a propaganda puff piece, and maybe Perth Mint paid for it. So it was just so bad, because everyone in the silver market and the gold market who tend to be skeptical against the establishment, they could just see through the piece. But someone took a screenshot, and I actually posted on Twitter. And again, these are gold bars sitting on a shelf in the Perth Mint warehouse, and there's a whole bunch of labeling using Post-it notes. And I was just being cheeky and put out a tweet and said, well, the Perth Mint has now just they have released the most technologically advanced storage system in the world. It's Post-it notes. So again, these sort of examples do not inspire confidence that the Perth Mint is actually actually doing what they say they are. But in fairness to the Perth Mint, Mario, what I'll say is, so what you've just described with Morgan Stanley and UBS, and David Morgan, the Silver Guru, sent me some of these articles a few weeks ago. So what I've been talking about over the last couple of weeks is converting from synthetic to either physical or allocated. Now, and we're saying that these synthetic products run on a fractional reserve basis. Now, technically, that's legal. But what's illegal is when you do fractional reserve allocated vaulting systems. And the reason why it's illegal is because if you have allocated, that's your legal property. And the vaulting company or the custodian, their job is to hold your legal property, and whenever you want it, you should be able to get it. So, and I've noticed two types of schemes that run. So the first one is what you just described. You give money to a bank or a dealer or whoever, and they say they're going to buy you metal, and then they're going to put it in the vault, and then they never do, and then they go off and do something else with the money. And that's what Morgan Stanley did. Now, the other type of fractional reserve allocated vaulting system is when a dealership is running low on inventory, customers are still coming in because of high demand, and rather than telling the clients that you are out of stock, what you do is you go make the sale, and you take ounces out of the allocated storage, and you basically hand it over to a new prospective client on the hope that when the next inventory shipment comes in from your supplier, you just take that new inventory and you take it, you replenish the vault with the metal that you took out. And David Morgan told me the other day that this was happening on a very large scale in America in the late 70s. And because the demand was so high, a number of dealerships thought they could make up. So when they stole from their clients to sell to other people, they thought they could make it up when the inventory came in, but there was just such a shortage they couldn't make it up. And a number of them got into financial trouble, and then they got into legal trouble for fraud. So there definitely is a risk around what I would call fractional reserve allocated vaulting systems. Now, I make no specific claims about the Perth Mint, and I should say that in the last 24 hours, I have spoken to a Perth Mint client who walked into their vault within the last 2 weeks to inspect his gold and silver bars, and it was all there. All the serial numbers matched. So there was no specific problems about the Perth Mint. But on the other hand, I should say that 2 weeks ago there was a situation with another company called ABC Bullion, and there was a lady called Julie G. Silver, who posted on Reddit and said that she stood for delivery of her allocated product, and they couldn't come up with her property. And I know that that Julie G. Silver is now considering her legal options, and that's potential. There could be a potential story to be discussed on that front in the next 2 weeks. But I mean, I would say a couple of things. One is, if you have a synthetic position, unallocated, pool allocated ETF, particularly if it's an ETF managed by JP Morgan, sell it immediately and go get physical. Now, Mario, I saw I think maybe yesterday or the day before, you had some comments about PSLV, and I actually agree with your position. So if you can get physical, get physical. If getting physical is problematic for a range of logistical reasons. Now, with PSLV, I mean, I talk to our American and Canadian colleagues on a regular basis, and they all say to me that there's no need to be concerned about PSLV now. So personally, I would say avoid ETFs, all ETFs. But if you need, if for security reasons or logistical reasons, you need to use an ETF. All I can say is the people in the know in America and Canada saying that you can trust PSLV and there's no problems with that in terms of that product now. So that's what you should do if you have a synthetic position. But if you have an allocated storage position, my strong recommendation is that if you are doing business with someone who has LBMA or Comex accreditation, don't vault with them, because they're part of we're talking about an international syndicate, and LBMA and Comex accredited organizations are part of the club. And as this pressure builds both in the physical market and obviously, like you said, it's starting in Perth, and we could see something in Montreal with Kitco, and we could start to see, as we get into the May contract with silver, there could be more pressure being exerted at Comex. It could well be that as more pressure is building in the system, LBMA or Comex accredited vaults may be tempted to do things that are against their client interests. And, I think people need to be careful about, that potential risk and obviously consider what their options are in that situation.
Yeah, LBMA is the London Bullion Market Association, and it's not even an exchange. And you look at the people running it, they're ex-Bank of England people. I think there's a guy there as well in the LBMA who is ex-Goldman Sachs, and also the head of the World Gold Council, which provides great information about the gold market. But you look at the World Gold Council, they push the small investors into GLD. So I wouldn't trust World Gold Council as well. I think they were the initial sponsor for GLD. So yeah, LBMA is basically the bullion banks, the central banks. There is a difference though between allocated and actually storing with a proper bullion dealer. For example, here in the UK, I use quite a bit Gold Investments. They're a family-run business in the City of London, and they store stuff for you in their vaults. And I asked the guy there, Oliver Temple, and I said, when I store, let's say, if I store my silver or gold with you, is that allocated? He said, no, it's not even allocated. It's just yours. It's yours there. You can come to me, bring it. I'll take you to the vault and we'll put it there and you have your name there. And so even allocated, I'm not too sure. So I would really double check. I would be more comfortable putting my gold and silver, let's say, with Gold Investments, because they're not even like saying it's allocated, it's just yours. And if I take my silver coin here and put it there, it will still be there. And I can go anytime there and take it out. So Yeah,
Sure,
avoid.
sure. Look, sorry to interrupt, Martin. Sorry
Yep.
to interrupt, Mario. One thing I just wanted to clarify, because look, what I've noticed in some of these interviews I've done, the language does change from country to country, and people can be slightly confused. So let me just be clear about what I mean by these terms in the Australian context. So when I say physical, it's basically you're taking a physical bar or silver, a bar of gold or silver, and you're walking away with it physically, and it's yours, and you actually are holding it. Now, allocated in Australia is what you've just described, which is it's your legal property, but someone's just holding it for you. So, for example, Mario, if I bought a kilo of silver and you said, John, I will store it for you in your place in London. Well, it's my legal property, but you're the custodian and you're vaulting it for me in your premises in London. So in the Australian context, that's allocated. Now,
Yeah, we have, just let me just interrupt you. We have allocated here too. But what I'm trying to tell you is if you deal with a small dealer, they don't even use the terms here because it's not necessary because it's yours anyway.
Yeah,
You just
sure.
store, and they even insure it, and they've got your name on it and everything. I mean, gold investments, they will trade unallocated silver for people who want like over 10,000 pounds, but they tell them that there's no VAT and there's no physical. It's just tracking the price. So unallocated, people who think they're saving money by not paying storage through unallocated, they're not really, they don't own the real thing. They're just tracking the price. It's just like an ETF tracking the price. And for PSLV, I agree with you that Sprott Asset Management is a trustworthy institution, but I've heard that there's a minimum that you have to take out the physical, and I've also heard, I might be wrong, that some people are lending the ETF so other people can short PSLV. Is that true?
Well, so look, in terms of the first point, I have heard that if you want to pull metal out of PSLV, you must have a minimum, and that minimum is probably out of the reach of retail investors. So pretty much you've got to be an institutional client or a wholesaler to have the volume to pull metal out of PSLV. Now, in terms of are they leasing or are they doing rehypothecation with PSLV? So far, there is no evidence that I'm aware of that. But now that you've raised that, I will email a few of our colleagues in North America and just ask the question, and then obviously see if there's any response. But I just wanted to finish the point. So we talked about physical and allocated. Now, in the context of the Perth Mint, unallocated is they have a stockpile of raw gold and silver that they use in their production, and you're just buying a share of that gold and silver in an unprocessed form. And obviously, if the price goes up and down, will you enjoy that exposure? And then if you want physical delivery, then you can get physical delivery. And obviously, prior to this recent scandal, the promise on the Perth Mint website was delivery in 10 days for unallocated, and they can't do that now. And that's why they've changed their legal documentation. So in Australia, there's for every financial product, and gold and silver is a financial product in Australia, there's a requirement to have what they call a product disclosure statement, a PDS. And a couple of weeks ago, like on a Friday afternoon, they released a new version of the document. And on page 16, lo and behold, there's a new paragraph, which basically gives them wiggle room around delivering on the 10-day commitment. So it's kind of like with SLV, they just changed the documentation in order to get around these obligations. And then they've also made a number of strategic changes to a number of their web pages that gives them legal flexibility if anyone tried to call them out on these certain issues. So that's unallocated, but pool allocated is, in the context of the Perth Mint, is basically there's supposed to be a warehouse full of 1,000-ounce bars, and rather than you specifically owning one or multiple bars, you just own a share of the pool. And again, as the price goes up and down, you can enjoy it. If you stand for delivery, you can basically take these bars and sort of enjoy that. Now, couple of controversies. In one of their recent web page changes, they have said if you have unallocated or pull allocated, you cannot stand for physical delivery immediately. You must go to allocated first. And once you are allocated, then you can take the metal out if you so wish. Now, one of the big controversies of the last 2 weeks has been that a number of retail customers have wanted to go to allocated, and they have been denied that option, including for pull allocated. Now, there are private sector providers in Australia that have been selling pull allocated, and they have enough silver to back the demand so far. And so as pull allocated products, customers with other dealerships have stood for immediate direct and immediate physical delivery, that has been allowed to happen. So there's definitely differences around that, but there have been a number of people with more than 1,000 ounces in pull allocated at the Perth Mint, and they've said, well, I would like a 1,000-ounce bar because this is supposed to be backed with a warehouse full of these bars, and they have had enormous problems getting the physical silver out of the Perth Mint, and that just has raised even more suspicions as to, well, what is really going on here. There's supposed to be a warehouse full of this stuff, and people are asking for them, and some days they're saying you can have some, on other days they're saying you can't have any. Like, again, the whole exercise has not inspired confidence among Perth Mint customers.
Yeah, I think I was just thinking one way to better describe allocated and unallocated is if you think about banking, when you put your money in the bank, you put it in a demand deposit, which is a current account. You can take the money out anytime. And then the other one is a time deposit. So I would say unallocated is like a time deposit, even though it's not a loan. But, you have to give notice that you have to convert it into a time deposit to take your money out. But I would say like LBMA, for example, in London, the rule for hypothecating in London is infinite. So people can rehypothecate many times over in London. In New York, I think there's a limit of 2 to 3 times. And that's why all the big bullion banks are in London, because they can rehypothecate it many times over. So, John, what do you think in terms of time frame? When are we going to see this problem in the physical market, that we have in Perth? And also, if you look at the retail and even wholesale market in the UK, in the US, the premiums are still so astronomical for silver. When do you think it's actually going to start affecting the bullion banks, the paper price? Because silver at $25 is still half the price that it was in 1980, and it's just crazy. And people are losing patience sometimes. I'm not, because I know where it will all end. But have you got any thoughts on that? How long we're going to be waiting? And this process, I guess, is a little bit like a contagion. Contagion can happen very quickly, right?
Yes. So a couple of points to make. So I may have said this in our last discussion. Everyone should avoid looking at the price, because the price is rigged, and it's not going to tell you the direction of the market. To find out where the market's going, you've got to study where physical ounces are moving back and forth to, in what quantity and why. And that's much more harder to get that sort of information. And so obviously there's sort of people relying on you, people like you and I, to provide information about what's happening in the retail market and in the wholesale market. So now, when we look at Comex, so there's only one thing I look at when it comes to Comex. It's not the price, and it's not even the trading of the futures contract or like the open interest. So I just look at one thing, which is the warehouse data. So every day the data is, and just to explain, this is how they play some of their tricks. So you can go on the Comex website today and download the warehouse report for gold or silver, and you get today's report. Well, when tomorrow comes around, you get tomorrow's report, but they don't show you today's. and so they just take it down. So if you want to actually track this on a day-by-day basis and get a feel for what's happening with the warehouse, you've got to do one of two things. Either you've got to pay a lot of money to actually get access to the full data set, or because these are spreadsheets, you've got to go on the website and just download these spreadsheets every day and just save them to your computer, and then start to construct a data set so you can track what's happening both at individual vaults, but also in terms of the entire warehouse depository system. And what we know is that for silver, Comex warehouse inventory just peaked on the 2nd of February at 399.7 million ounces. So far, we've seen 30 million ounces plus leave the warehouse, and that was obviously a number of people have been looking at this for a long time. They think that this was highly significant, that this volume was moving so quickly. Now we're into April, and typically April is an extraordinarily quiet month for silver, because it's a delivery month for gold. But obviously the level of demand this month is going to be much higher than previous Aprils, and it could be up to 15 million ounces. So now, just to give the audience some context, so March 2021 was the second biggest delivery month in the history of the market at about 58 million ounces, whereas the biggest month was July last year at about 86.4 million. So there will be, I don't think that on the warehouse level there won't be much movement in April. But once we get to May, well, talking to some of our friends in Canada, some of them are suggesting that the number of ounces standing for delivery for the May contract could be anywhere between 65 million to 100 million ounces plus. And dare I say, if we see a big number like 100 million ounces for May, they are going to struggle to come up with all of that silver in terms of meeting their delivery obligations. And it could well be that we go a couple of weeks into May and then they start to run into supply problems. And then from there, that's when they have to let the price go higher. So, and this is what happened in July last year. The first 2 weeks of July 2020, the price of silver did nothing. And then from mid-July to the end of the first week of August, the price went up 60% from $17.95 US an ounce up to 29. And the reason why that they let the price go higher is because they need to attract sellers so that they can obtain enough silver to meet their delivery obligations. So, so I think when I look at the physical market, everything's looking very positive in the sense that there's not much floating around. We are now seeing crises in these synthetic products, just like Craig Hemke forecasted in early February. We're seeing silver and gold leave the vaults on an epic scale at Comex. And as we go forward, we're seeing still record amount of physical gold and silver being asked for in April, May, and then obviously with the macroeconomic picture, that level of demand for physical ounces that's going to continue probably over the next 6 months at least. So so everything's looking super bullish, and I mean, to my mind, there is a price ceiling operating in the silver market, and the price ceiling is, I would say, it's $30 an ounce. So in the last 9 months, we've probably seen the price of silver get to $30 an ounce on 2 occasions, and then it comes back down. So so I think there's a very strong possibility that the price does go above $30 an ounce in May, because there's an expectation that there'll be a record delivery month, more than 86 million ounces, but we'll have to see. But if they somehow survive May, well, then I think they're going to run into big problems in terms of July. So I think, yeah, look, the next few months, I think we will apply enough pressure on on Comex to see the price go above $30. But yeah, independent of Comex, I mean, in the last 4 weeks, I've just me alone doing discussions with you and other YouTube channels and my own YouTube channel and Twitter, etc. I've moved 20 tons. So I've got an Excel spreadsheet that I'm just keeping tabs on. So I say to people, when you convert from synthetic to physical, send me a story, tell me which synthetic product you had and how did you take physical. and I'm keeping a track record of that, and I've documented about 20 tons, and that is as of yesterday, which is Tuesday, Australian and London time. I've moved about 20 tons, and these are people who have said because of my commentary and advocacy, they've moved their product over, and I think we're going to see more action this week. And again, I mean, look, this is 20 or 30 tons of physical ounces of silver that the bullion banks didn't expect to be out of their clutches. But this is what I guess one of the things I say to our Australian customers: the more physical ounces you take, the more you deny London, New York the ability to use these ounces to continue their price suppression and Ponzi scheme. Look, we're applying maximum pressure, and the word's getting out. And like I said at the beginning of the interview, once you go from synthetic to physical, you're not going to go back because you're awake as to what's going on. And we're seeing a permanent change in the market, and I think that trend will continue. And again, I think May, if not May, July, will be some exciting action in the market.
Yeah. Do you think that Comex and, for example, a lot of the silver ETFs, do you think they share the supply metal? Because it's all run by the bullion banks anyway. The big Comex holders are bullion banks. The trustees, the people who manage the ETFs, are bullion banks, and that's the problem for them. Comex is supposed to be just a paper market. I even spoke, I think, in my live stream on Sunday. I showed people the WikiLeaks document from 1974 saying that the gold futures was going to be created to keep people away from physical. So yes, I encourage the general public, retail investors, to only buy physical, because that is really the Achilles heel for the bullion banks. And so, do you think that that is true, that Comex and, let's say, LBMA and the ETFs, they share the same silver, and you taking it out physically is a problem for them? Because what people need to understand, the only way they can short silver or gold is to borrow it, and they can borrow it many times. Like, let's say the LBMA has 1,000 tons of gold, a bullion bank will go and borrow 10,000 tons of that 1,000 and then short it in the market. So do you think that is what they do, that they share the inventory between these kinds of asset classes?
Sure. So I mean, the best experts in the market who have been looking at this for decades, whether it's Ted Butler or David Morgan or Craig Hemke or Andrew Maguire or some of these people, they all say that the paper claims against each individual ounce of silver is anywhere between 100 claims all the way up to 1,000 claims per ounce. And I think even Jeffrey Christian of CPM Group has said it's 100 claims to one. So if you've got an insider like that saying the rehypothecation is on that scale, well, then obviously they are leasing and double counting and triple counting with these. When I look at this market, I look at this market as a price ceiling below equilibrium. And if you think about your basic macroeconomic theory, a price ceiling below equilibrium means that there's excess demand. Well, how do they hide this excess demand? They use products that basically convince people that they own something when they own nothing. And this is the ETF, this is the unallocated, pull allocated accounts, and a whole bunch of other sort of techniques that they use to divert demand from real physical ounces into other products that give the appearance of ownership, but they actually don't own anything. So I do think that there are issues in the market. How big are the issues? We can only speculate because the market's not transparent, and it's not transparent on purpose because they're running a Ponzi price suppression scheme, and they don't want people to know what's really going on. So, but what we really don't know is what is the scale of it. So, the best thing we can do is to convert all of our synthetic positions, and we're talking not just millions of dollars. We're talking in the billions of dollars. So even in the case of the Perth Mint, their synthetic products run into more than $1 billion. So again, everyone's waiting for the whale. Look, and I think we said this in the last show, Mario, that the Warren Buffett, the Elon Musk, the Apple, the Samsung, people with deep pockets to move the market. Well, these synthetic products, we with Kitco and Perth Mint and Bullion Vault and a whole host of other product providers in the market. If you add up all of that money around the world, we're talking $4 or $5 billion at least. And if all of that synthetic position, and you know what? Look, and when I talk about just that 4 or 5 billion, I'm just talking unallocated, pool allocated. If you add these ETFs on top, run by where JP Morgan is the custodian, we're talking in the tens, if not in the hundreds of billions of dollars. So you just need a good chunk of that to go from these products to physical, and that's going to be enough. So we don't need Eric Sprott or Warren Buffett or Elon Musk or Tesla or Apple or Samsung to raid the Comex. We just need the retail arm of the market to take hundreds of millions, if not billions of dollars off the table. And that should be enough to really place a dent in the pricing scheme. And then you're going to start to see fireworks. And then basically from there, we're going to see some exciting things happen with the price.
Yeah, I remember a few years ago, Kyle Bass, the hedge fund manager, I think he's from Texas, he called the Comex and said, would you be able to deliver $1 billion worth of gold to me? And basically they said, it's going to be really difficult because we're not really a physical market. So he actually bought physical. So there are big fish out there who know about this. I think it's really great that the retail side of the market is starting to learn about this. And I have to say, Wall Street Bets helped that a bit. And I think it's going to continue. So have you got any final last words for the viewers? Even though you've covered most everything, I think, in this last hour or so. Before
sure. The only thing I'll say, Mario, is that look, this situation with these synthetic products, I mean, more information is coming out by the day. As soon as I get information that I think is that it's worth broadcasting, I'm broadcasting on my social media platform. So I think the best vehicle is following me on Twitter. My handle is adamseconomics.com. I've got a Telegram group, which is Adams Economics, and people are on Telegram. I do have a Facebook group that it's smaller, but some people go there. My website, adamseconomics.com, and I write a newsletter anytime I think there's something important to communicate, and I do write articles there. And then just my YouTube channel. So I do a YouTube show with Martin North in the interest of the people. We do have a YouTube channel with the bullion dealership I work with, As Good as Gold Australia. So we put content out there. People should follow it and just keep track of what's the latest developments and again, just spread the word. I think the best video is I did a video with Martin North called "Exposing the Synthetic Silver Scam," where we go into some detail explaining the differences of these products. And we give a very good foundational explanation for people who are new to the market. So if you haven't watched that video, go watch it, and go share that video with your friends and family and people interested in gold and silver. And the more we talk about it, the more the word spreads. The more we literally will change not only the market, but we're going to change the world.
Yes, that's right. So, John, thank you very much for coming back on the channel, and I hope to speak with you maybe in 2 weeks' time, or maybe even earlier, to see if we get any fireworks on the silver market or a silver price.
Fantastic. Thank you for having me on, Mario.
You're welcome.